Hi friends, welcome to this pre-market analysis of Nifty, where on a chart we try to make informed guesses of where buyers and sellers are. So these are the fair value gaps and lines that we had drawn. Every red line is a resistance and every green line is a support. A red box is a bearish fair value gap and a green box is a bullish fair value gap. So prediction for yesterday was that Nifty would Nifty could consolidate along this line, along this zone for the rest of the month, and then make a movement towards the end of the month. So it is almost playing out as it is right now. So for the time being, let's just go and delete all the analysis from yesterday and start afresh. This is what we always do. So for first timers, we start analyzing from the monthly time frame going downwards. This is an indicator that I am testing now. I've just developed it and I'm just testing it. This is like both of it is the same. We analyze biases on different time frames, and this is the manual table I fill in, and this is the indicator. So I'll be testing this for a indicator for a while, and then when I find it's perfect, I just do away with this manual input. So on a monthly time frame, there is no bias in Nifty. Uh, so if there are higher lows being formed, it's bullish, and lower highs being formed is bearish. So Nifty was bearish here, and then it became bullish there, and then this high was invalidated, it became bullish, and then now this low was invalidated, and then there is no lower high or higher low, so it is not sure. There are some levels to look out for. The most important is this swing low. I shall mark it in red and mark it with a thicker line. So if you look at it, this swing low, every swing high and swing low are areas of liquidity, and as you can see, there was this swing low sitting right here, and you see this, that's the reason I said yesterday and the previous day that Nifty could consolidate in this level for the next few days, and towards the end of the month make a move. Close above this means it's bullish, close below this, that means it is indeed eating the liquidity there. So if there's an area of, if there's a monthly level of liquidity, it could take some time to eat the liquidity there. So that's one analysis, and then the support is this swing low right here. That was never taken. I expected it to be taken in this down move, but it stopped short of a few hundred points short of that level. So moving on to the, so there's no the monthly, on a monthly time frame the price is not sure. Moving on to the weekly time frame. On a weekly time frame, it is bearish. Why is it bearish? Because unfortunately this swing high is lower than this swing high, and that is the reason, by a few points, by a very few points. But so if Nifty has to become bearish, it has to go and invalidate this high. So that could mean Nifty taking, almost reaching 80H again. Now, there are some interesting arrays, PD arrays, they say. It's like premium and discount arrays. Basically, we call it buyers and sellers here. So this is a fair value gap, that is a bearish fair value gap that was created while Nifty was coming all the way down. So what's a fair value gap? Fair value gap just means there was too much volume in these trades, that a lot of the orders were not executed. So limit orders, they essentially have a market protection of a certain percentage. So if the market moves so fast that plus or, for example, plus or minus 1%. It's just hypothetical example. If the orders do not get executed at that particular price, the order remains open. So these are like the fair value gaps of the traders who placed orders here have not got fair value. So the market essentially senses liquidity, comes back and takes those orders. So that's a theory. Now let's go and see. There's another swing low in here. A swing low in a fair value gap is sort of confluence of two PD arrays, and that is again a strong area of sellers. So this is where I said Nifty could consolidate for some time. So anyone wanting to sell calls and puts, and what they call iron condors, could make some money in this area. Tomorrow is expiry. If somebody had taken it, since the day I was saying, it could have made good money. I myself have not taken it. Coming on to the weekly time, in the weekly time frame, you see there's also a fair value gap here. I don't want to mark it up, so it's like a tight range where Nifty is going to trade. So let's go to the daily time frame. On a daily time frame, Nifty is bullish. Why is it bullish? Because this is a swing low and this is a higher swing low. So higher low, it means bullish, and there's a fair value gap in here. It's a bull. I just went a little too high. It's a bullish fair value gap. So let me mark it in green. It's a daily fair value gap. So this is a tighter range now we have, right? So this is a daily fair value gap, and this is a weekly bearish fair value gap, and daily bullish fair value gap. Okay, and now let's go on to the 4-hour time frame. On a 4-hour time frame, Nifty is bullish. Why did I say outrightly bullish? This swing low and this swing low. That is the reason. So it has made a higher low. So higher low means buyers are buying at higher level with more confidence. Like it looks like there are more market orders moving higher up in the in price. So that's the higher lows, and that's why on a 4-hour time frame, Nifty is bullish. Going over to the hourly time frame, an hourly time frame. Let me take a look on an hourly time frame. On an hourly time frame, this was a swing low. Let me make it a little bigger for everyone to see. For those of you who are watching in mobile phones, you see, this is a swing low, and this is a swing low. So it made a higher low. So if these two candles if this candle didn't exist, it's a bullish bias. But unfortunately, this candle does exist, so this low was invalidated, and now we look at it with a new pair of lens, and you see that's when you see this is swing high and this is a lower high. So lower high has been created, it is bearish, and so it is, I have to correct it here. And the daily time frame was bullish. So that is all for the analysis for today. I would prefer to stay out of the market. I am a momentum trader, intraday trader, so I do not expect a lot of market could move violently but not predictably, and could need not move in a certain direction for a long extent. So that doesn't give that's the kind of trades that I prefer. It doesn't give me much opportunity here, so I would prefer to stay out of the market tomorrow for my intraday option buying trades or intraday future trades. That's all. I am not a certified analyst. I do this only for educational purpose. Thank you.